from 1776, when we created the Republic, to 1913, the dollar was worth $1. Now, it had a little fluctuation around a depression and a war, Civil War, but $1 is worth $1. There was no such thing as inflation. In 1913, the Fed was created by these wealthy families, J.P. Morgan, John D. Rockefeller, the guys from the Rothschild clan from London. And they created this with the sole purpose of controlling money. Because Baron Rothschild years ago said, I care not who issues the laws. If I issue the money, I am the law.
It's long been established that the central banking system is fundamentally flawed, continuously extracting wealth from hardworking individuals to benefit a select group of elites. This system underpins the fiat money scheme, which is arguably the largest and most enduring financial scam in history. Many founding fathers vehemently opposed the idea of a central bank, seeing it as a mechanism for speculation, financial manipulation, and corruption. In a letter to J.Z. Bowen, the 47th Deputy Governor of Rhode Island, George Washington stated that paper money invariably ruins commerce, oppresses the honest, and opens the door to every type of fraud and injustice. Similarly, Thomas Jefferson believed that banking establishments were more dangerous than standing armies and described funding future expenditures with paper money as swindling future generations on a large scale. He also referred to paper money as a ghost of real money, vanishing into thin air and bringing poverty. John Adams echoed these sentiments, attributing all of America's perplexities, confusion, and distress to paper money, which can be extended to the global context today. Despite these warnings from centuries ago, the world remains plagued by this corrupt system that perpetuates wealth disparity. In a recent interview on the Advancing Our Church podcast, renowned hedge fund manager Mark Yusko discussed the numerous failings of the central banking system and highlighted how the transparency and integrity of blockchain technology offer a stark contrast to the current financial system.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
There's only one money in the history of the world, really. I mean, there have been multiple attempts, but only one that survived for the last 5,000 years, and that's gold.
Right.
Well, what do I mean by that? Well, money is an asset that exists in the absence of a liability. Everything else that we think of as money are actually currencies. They're backed by debt, government debt. And so dollars, yen, euros, drachma, whatever, drachma went away, now we have the euro. Those are currencies. But gold has been money for a very long time, right? Back to Cleopatra's time, to a suit of armor, to a zoot suit in the 20s, to Savile Row today. You take a single ounce and you get exchange for a fine person suit. Because it's been a perfect store of value. And the currencies, the paper currencies, there have been 775 paper currencies in the history of the world, starting in the 1300s in China. 3/4 of them disappeared. They just vanished because governments get so far indebted that the empire eventually crumbles. Roman Empire, Ottoman Empire, British Empire. Now, Britain's still there, the UK's still there, but a single pound note 360 years ago would get you a pound of sterling silver. Today, it would take you 174 pounds of sterling silver to get a pound note. So it's that dilution of value that's preserved in true money. But here's the problem with gold. Let's say I had a bar handy. Now, if I was Kyle Bass, right, everybody knows Kyle, he would literally reach under his desk and he would pull out, he keeps a 26 kilogram Australian gold coin in a safe under his desk. If I had that and I wanted to break it in half and send you half, I'm not strong enough to break it. It's not very divisible. Even if I could break it, I couldn't stuff it in the computer and send it to you. So it's not very functional. Whereas Bitcoin, it has the same scarcity as gold, meaning the amount of new Bitcoin each year that's created is roughly equal to the amount that's lost or stolen. Same with gold. So the scarcity is the same. And that's why scarce assets retain their value. But the divisibility and the portability are better So I think for the next 5,000 years, Bitcoin becomes. So that's a super, super, super long answer to why do I care about digital assets? Why am I a late in life venture capital? Scarcity creates value.
Yeah.
And it's because there's certainty, right? One of the problems with our money, right, the dollar, is this thing called the Federal Reserve, which I always joke is neither federal nor has any reserves.
Nor reserve, right?
It's actually not a bank the way we think of a bank. It's actually a private corporation owned mostly by Europeans, which is kind of weird. So wealthy European families. And it was created in 1913, modeled after the Bank of England, which was modeled after the Dutch National Bank. It was created by a bunch of European families back in the 1600s. And what a central bank can do is they can create money out of thin air. Well, wait a second. Isn't that bad? Like, think about it. If I have a stack of $1 billion over here, and I create a new stack of freshly minted $1 billion, what just happened to the value of my old stack? Well, it got cut in half.
This is precisely where central banks like the U.S. Federal Reserve excel. They debase and dilute the value of fiat currencies until they become nearly worthless. A prime example is the significant loss in value of the dollar since the creation of the Federal Reserve. According to various sources, including the Federal Reserve itself, the dollar has lost over 95% of its purchasing power. Today's dollar would be worth less than 4 cents compared to 1913, the year the Federal Reserve was established. The official CPI inflation calculator shows that $1 in 1800 is equivalent to about $224.79 today. As illustrated in the chart, the dollar's purchasing power has been declining steadily since the early 1900s, with no significant periods of recovery like those seen in the 1800s. This problem is expected to worsen rapidly over the next decade as the world's reserve currency continues to lose value due to unchecked government borrowing and spending. Let's return to Mark Yusko's interview.
Thomas Jefferson said it best, right? If you ever let a private enterprise control the issue of money, your grandchildren will wake up penniless on the shores of the land that their grandfathers conquered. And it's true because if you can create something with no effort, at least with gold, you have to mine it. You have to find it. You have to dig for it. You have to mine it. You have to smelt it.
Right.
With Bitcoin, you have to do something called proof of work, right? You have to buy a machine and you have to tap into the algorithm and you have to pay for electricity and you have to produce effort. And this is one of the most genius things. If you think about all of life, big statement, right? All of life.
Right.
It's about converting energy to value. You create a podcast, you fuel your body, right? You fuel your mind, and then you produce value through your effort. If we're supporting our church, right? We're giving our time, our talent, our treasure, okay? We're converting energy to value. Mm-hmm. And everything in life is about that. And so things that go against that are antithetical to true value creation. And one of my hashtags over the past 7-8 years has been get off zero. Okay. Now, what does that mean? It means that zero allocation to Bitcoin and digital assets is the wrong number. When I started down this path in 2013, 14, I didn't really understand it. It's a true story. I got introduced to Bitcoin the same month as the Winklevoss twins. And if you've read the book, Bitcoin Billionaires, which is a great book, Ben Mesrick is a brilliant writer. It's an easy read. You could read it over the weekend. So good. Such a great story. But they're multi-billionaires and I'm not. Why? Well, they got it. They were younger. They didn't have a business that they were tethered to. When I got introduced to it by this good friend of mine, I got the idea, but then when I started doing work and I started writing about it to my clients were like, no, you're an idiot. Go back and do your job. We'll fire you if you talk about magic internet money. And the price went from $500 to $186. This was from March of 2014 to September. I'm like, oh, they were right. 8 weeks later, it was $1,000. I'm like, no, there's something here. What is it? Why does it keep being so resilient? And it would go down, it would come back up, and then it would go down. And every time it was making higher highs and higher lows, and the value of the network was growing. So I started diving deeper into this idea of network effects. And there's this guy named Sarnoff, and he created something called Sarnoff's Law. So when I was growing up in Seattle, I could listen to WGN radio, which is in Chicago, right? Well, how is that possible? Almost 3,000 miles away. How is that possible? Well, they had this giant antenna, and it would beam this magic signal, and it would bounce across the atmosphere, and I could hear it. Well, Sarnoff came up with this rule that said that networks, were equal. The value of a network was equal to the number of people that could hear that signal. So he said it was a linear relationship. If you heard it and I heard it, then it went up 2, and if another person, it was 3, and then 4. Well, then this guy Metcalf came along at MIT and said, well, yeah, okay, that's fine. But what if Jim and Mark talk to each other? What if they form a connection? Well, now it's not a linear relationship. Now it's an exponential relationship. And the difference between linear and exponential, the most powerful example I use is if I take 20 linear steps across the office, I get to the other side. If I take 20 exponential steps, I go around the world twice. It's unbelievable, right?
Interesting.
And so exponential growth of networks.
Like Mark Yusko, popular Bitcoin on-chain analyst Willy Wu believes Bitcoin is poised for explosive growth. In a recent tweet, Wu noted that Bitcoin's global adoption is at 4.7%, equivalent to the Internet's adoption level in January 1999. The lower curve of the S-curve is just beginning to show, indicating substantial exponential growth ahead for the leading cryptocurrency. Wu suggests this means we are still early in Bitcoin's adoption phase. In another post, Wu revealed that high-net-worth individuals are buying more Bitcoin now than ever before. He stated, "Never has there been such a buying spree by high-net-worth Bitcoin holders as has happened in the last 2 months, with Bitcoin prices ranging between $60,000 and $70,000. These individuals are holding between 100 and 1,000 Bitcoin, roughly $6.5 million to $65 million worth." In a follow-up tweet, Wu clarified that this buying spree is not from spot Bitcoin ETFs but from entirely different investors. He explained, "No, these are not addresses. These are forensically clustered entities. You can also look at the published ETF flows and you'll see they do not match. ETFs have been in distribution, while these guys continue to stack." Please share your thoughts on Mark Yusko's interview and Willy Wu's revelation about whales accumulating more Bitcoin. What do you think this means for prices as we move deeper into the bull market? Share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.